at PDAC 2017. We're with Eric Coffin of HRA Advisories. Eric, thank you for joining me. Let's go over the talk that you'll be doing today and what you'll be sharing with the audience.
Okay, essentially, I'm going to spend a little bit of time on macro. There's a lot of consternation right now. Every time this year, there's always the PDAC curse. People worry about the whole sector selling off for a couple of months. It's not uncommon. It does happen a lot of years. It doesn't really have anything to do with the PDAC. It's just coincidence. This happens at a weak time of year for gold prices generally. Part of my talk is that, well, it's probably sensible to prepare for that. I'm not sure we're going to have that much of a sell-off this year for a couple of reasons. One is that we're pretty early in this resource bull market still, and the markets don't behave the same way early in the cycles as they do late. You can look back at a 20-year chart and circle all these periods every year where there's a sell-off in the spring, but most of those periods are during bear markets, not bull. Bull markets don't react quite the same way. The other reason is, the last two times the Fed has raised rates, it's actually been a buy signal rather than a sell signal for gold. It's been, sell the rumor, buy the news.
Right.
I expect the Fed to raise rates this month. I mean, every one of the FOMC members is telegraphing it, so I think we got to assume it's going to happen. Mm-hmm. It may be a buying signal again, but what I went into mostly in the talk was I don't really focus so much on interest rates, nominal interest rates. I focus on real interest rates, inflation adjusted.
Right.
If you look at long-term graphs, long-term trends, there's an extremely strong positive correlation between gold prices and negative real interest rates. If you look at the 10-year part of the yield curve, real rates went negative about 2 weeks ago for the first time in 4 years. If you go back and look at where the most negative period was for real 10-year yields in the last 10 years, it's the peak of the gold prices.
Right.
Like there's a very strong inverse relationship there. So that, it's giving me some comfort that I've seen those rates go negative again. I think that's going to support things a bit. So I'm not that worried about it. I'm telling people, look, it's never a bad idea to take some money off the table if we've had a good run. You should just always do that. Expiration stocks don't work most of the time. That may sound silly coming from me, but it's reality. Mother Nature isn't that nice to us. If she was, gold would be 5 cents a pound, not $1,200 an ounce. But right now I'm just trying to focus on individual names where I like their near-term prospects, and I'm not getting too worked up about, oh my God, there might be a sell-off after PDAC, we're all going to die. I'm just not that worried about it.
Right, and for our audience, what are some of those names, if you can share?
Farther along at the development level, if you will, I'm very big on zinc. I have been for a while. One company I follow that is here at PDAC is a company called Vendetta Mining. They've got a very nice growing zinc lead reserve. They're right in the middle of the largest lead zinc mining area in the world, which is actually in Australia. I'm expecting metallurgy imminently. I'm not worried about it, but metallurgy is always a big issue with base metal deposits, so if that looks good, that's going to help them a lot. They start drilling again in probably a month or so. I think they're probably at about 8 million tons now. If they can get it to 12 or 15, and their CEO, who's a really good geologist, has laid out, this is how I'm going to try to get there, and it makes sense. If they get to 12 or 15 million tons, I think that thing won't be around long. To me, it's a really obvious takeover candidate. At the opposite end of the spectrum, if you're not afraid to swing for the fences and go early, a couple of companies I follow here, they're similar in a way. I mean, one's called Atomera, ADZ on Vancouver. Mark is basically reinterpreting an entire gold camp in Northwest Washington. No one had ever flown airborne surveys. Most of the basic stuff has never been done in this area, even though it's produced 6 million high-grade ounces relatively recently. He's done that. He's generating a very large set of new targets. I expect to see him drilling probably anywhere from 5 to 15 new targets, probably starting in Q2. It's one of those stories where you can kind of see the markets trying to get behind it.
Right.
To me, it feels to me like one where you're going to actually get a fairly good momentum run in front of drilling. And this is something I always try to find for subscribers. The thing with momentum and basically story catching the attention of the market is the way to play those, the way to play the market rather than the market play you. You've got to be willing to be basically brave enough to be ahead of that curve.
Right.
Another one that's similar, they've got a very nice high-grade gold drill target that I think they'll be drilling probably within a month, but they're also generating this whole set of new, very interesting looking targets based on a collaboration with a guy that does remote sensing. He's got his own sort of algorithms. He's applied it very successfully in Peru and found a couple of deposits. He's hooked up with the San Marco guys, and they're doing all of Sonora. They've already got 2 or 3 targets they've shown me that look very, very interesting.
Right.
Early stage stuff, but I don't think they'll have a lot of trouble finding partners to drill some of these things, and then they'll drill some stuff themselves. But it's kind of a nice double threat, that one, and very well run. Both of these companies, one thing they have in common is very strong technical management, very frugal. Neither of these companies goes through much money. Both of them have very low M&A, very low overhead. They're not screwing around. The money goes in the ground.
Right. Now, lastly, if you've made any mistakes in the past as a writer,
I got a list
as a
here.
newsletter writer, what'd you learn from those things, and what do you do differently now?
I told myself as we went through 5 years of bear market that when the market turned again, I was going to be much more forceful with subscribers. And I don't always eat my own cooking when it comes to this, to be honest, but a lot more forceful with them about profit taking. Because the whole idea with these stocks is you always have to keep firmly in mind that with any early stage explorer, the odds of that project becoming a mine are extremely small. That's simply what the odds are. So you need to use the market. Don't let the market use you. And if I'm doing anything differently, it's trying a lot harder to find those situations, but also being way more forceful, probably to the point where I'm boring the crap out of my subscribers. Like, yeah, whatever, take profits. But I'm going to keep beating people over the head with that, because you've got to watch your risk reward when you're playing these things. You have to. That's the only way to win at this game.
Well, where can we learn more from you, Eric? How can subscribers be your new subscriber?
Well, if you go to hraadvisory.com, the best deal you're going to get is there's always, in the upper right corner of the homepage, there's always some kind of a report being offered. If you go and give an email and pull that report, the links inside those reports are always actually a better deal than if you go to the subscription page.
Okay.
I don't remember what the deal is right now. I think it's a 50% off deal.
Well, thank you so much, Eric, for your time.
Okay, thank you.